In this video, we're going to learn a little bit more about price action, in particular, peaks, valleys, trends, and reversals. Let's take a closer look at what we're going to cover. We'll start by looking at market movement and cover each of the aspects that I've just mentioned. We'll then look at trends and what they are and how they work. So let's get started. Now, the Forex market never moves in a straight line. In fact, the market moves in a zigzag manner. As you can see on the image on your screen, in an upward move, there are surges downward, and the same in a down move, there are surges upward. This is what causes the zigzag movement of the market. The market moves in a particular direction, but then pulls back in the opposite direction. This forms peaks and valleys. Peaks are essentially highs where the market turns downwards, and valleys are lows where the market turns upwards. If you refer to the chart once again, you'll notice that the white arrows show an uptrend. Price is moving upwards, but then stops for a while and pulls back in the opposite direction. It then continues to move upward again and then pulls back again in the opposite direction. If you look at the yellow arrows, this shows a downtrend. Price moves downwards in a strong move and then pulls back again in the opposite direction. Price then resumes the initial downward move, and again, after a while, it will pull back in the opposite direction. So the market keeps zigzagging in this fashion. Even though it may be moving upwards in a strong uptrend, it will tend to pull back in the opposite direction. So it leads to the zigzag movement. The zigzag movement occurs in all three directions. That is, upwards, downwards, and sideways. Now, it may look to be a bit of a mess, but there are plenty of profitable trades that can be made in this zigzag movement. We use this to our benefit and make profits from these movements. So what is a trend? Well, the market has a tendency to travel in one direction for a length of time. These longer-term movements are called trends. A trend is a prevailing move in the market direction. Trends are made up of a series of peaks and valleys. In an uptrend, you will find that it is composed of consecutively higher peaks and higher valleys. And in a downtrend, you will find that it is composed of consecutively lower peaks and lower valleys. On a chart, you will find that in an uptrend, price will move from the lower left-hand corner to the upper right-hand corner. While it makes this move from one corner to the other, it's going to zigzag in typical fashion. For a downtrend, price will start at the upper left-hand side corner of your chart and move downwards towards the bottom right-hand side corner, all the while zigzagging as it makes its way down. Let's take a closer look at an image that might make the picture a little clearer. So is it an uptrend or a downtrend? How do you know? If you look at the image on the screen, on the left-hand side we have an illustration of an uptrend. You will see that an uptrend is composed of highs that are getting consecutively higher. You will notice that they are forming higher highs. The same with the lows. The lows are getting consecutively higher. An uptrend is composed of consecutively higher peaks and higher valleys. On the right-hand side of the image, you can see a downtrend. You will notice that the lows are getting lower and that the highs are also getting consecutively lower. Downtrends are composed of consecutively lower peaks and lower valleys. Trends are, of course, relative to the time frame you are currently looking at or trading. For example, if you are looking at the daily time frame, a trend could last for a number of months. Meanwhile, on a 1-minute chart, a trend can last for up to 2 hours or more. While a trend moves in one general direction, either up or down, it will usually move up or down in a zigzag pattern, like we've seen in our examples. It is never formed in a nice, smooth, straight line. That's just not the way the Forex market works. Every time you see a trend on your chart, it's going to be moving in a zigzag fashion. Let's take a look at another example. On this 4-hour chart of the Euro USD, you can see that the market bottoms out and then rallies for 94 candles before it finds a solid ceiling and then reverses. As you can see, on the bottom left-hand side, price started off at a really low point and then started moving upwards, and it continued to move upwards for quite a long period of time. As you can see here, it's been in an uptrend for a couple of weeks. This, of course, is a 4-hour chart. On the next image, you can clearly see that price is making higher highs as the market climbs. This is an indication that the market's in an uptrend. Whenever we see a series of higher highs, it gives us a clue that the market's heading upwards. Each high is marked with a horizontal white line, and you can see that every time a high is formed, it is formed higher than the previous one. This is the same chart, but this time we're looking at the lows. In an uptrend, you'll notice that the lows seem to get consecutively higher. As you can see, every time a low has been formed, it is higher than the previous low. This tells us that the market is in an uptrend. This would be a great time to look for buy trades. Now let's take a look at an example of a downtrend. As the market falls, it makes a series of lower highs and lower lows. If you look at the image that we have, you can see the price started off at a high point close to the red line at the top of the chart, and then started moving lower. And as price continued moving downwards, each of the new highs were formed consecutively lower. This is a sign that the market's in a downtrend. Here you can see the same chart, but now you can see a series of lower lows. The lower lows are pointed out by the horizontal white lines. And as you can see, every time a new low has been formed, it is formed lower than the previous low. This tells us that the market is moving downwards and we are in a downtrend. This would be a great opportunity to look for sell trades. Now, trends are broken down into different durations. If you look at the image on the screen right now, you can see that we have a main trend that has a definite upward direction. Price is moving from the lower left-hand corner up towards the upper right-hand corner. It is zigzagging, as it normally does, but over this extended period of time, you can see that the market is definitely going upwards. Now, within our long-term trend, we're going to find a medium-term trend. This is a picture of the same chart. But here you can see the medium-term trend goes against the direction of the main trend. And as price goes upwards, you're going to find occasions when price does reverse. This is what causes that zigzag. The medium-term trend goes against the opposite direction of the main trend before resuming and continuing in the direction of the main trend. If you look a bit closer, you can also see the short-term trend. The short-term trend is a part of the medium-term trend. The short-term trend goes in the same direction as the main trend, but it is contained within the medium-term trend. The main trend, or overall trend, is the trend direction that carries the most weight. When looking at several different time frames, the highest time frame will show you the main or overall trend direction. It's always a good idea to see what the longer-term time frame is doing. A setup for a short trade may not turn out too well if the next higher time frame is moving in the opposite direction. The trend is the direction of the market that will present us with the best trading opportunities. I always consider the time frame I trade to be the medium-term time frame because it gives me the opportunity to look to a higher time frame to determine the overall direction. What's important to remember is that the trend is the direction of the market that will present us with the best trading opportunities. That's all for now. Thank you for joining me, and I look forward to seeing you in the next video.